Ladies and gentlemen, Tesla stock, albeit volatile today, is trading higher, up 0.7% at the time of recording this video. We do have some breaking news to go over in terms of trade and Tesla specific news. In the news today, coming from the official Tesla Megapack X account, they say congratulations to the Megafactory team in Lathrop, California on building the 15,000th Megapack 2XL. Elon Musk also set the first public Tesla Model Y robotaxi ride date in Austin that are now currently scheduled for June 22nd, but that date could shift. Elon says, quote, "We are being super paranoid about safety, so the date could shift. First Tesla that drives itself from the factory end of the line all the way to a customer's house is June 28th. So a lot of people are like, what about Thursday, like June 12th? Yes, that is a small launch, okay? We're talking about the public launch of the robotaxi, which June 22nd, I think, was a lot faster than most people expected. And early this morning, Elon Musk says that he regrets some of his post about the president last week. He says they went too far. That's basically his way of like apologizing. And that's seen as positive today as well. Trump said this on if he could reconcile with Elon Musk. He says, quote, "I guess I could." And here we have another video of the robotaxi spotted at night with nobody in the driver's seat. This looks like they're just sitting at a red light and the guy next to him, seen the robotaxi and took a video. The main supplier to Australia's most powerful big battery has filed for bankruptcy. This could open the door for Tesla to become the new supplier. Elon Musk says that they're waiting for Dutch authorities and then the EU to approve FSD. This individual, Alexander on X, says it's ridiculous how they have robotaxis in Austin without any driver, yet my Tesla here in Sweden is not even allowed to change lanes on the highway without me confirming with the turn signal. Elon Musk goes on to say it's very frustrating and hurts the safety of people in Europe, as driving with advanced autopilot on results in 4 times fewer injuries. Please ask your governing authorities to accelerate making Tesla safer in Europe. And I do hope you guys recognize the shift in just the conversations, the topics that Elon is talking about on X. A month, like Elon's post about Tesla and Tesla's AI projects has to be up like thousands of percents. Okay. In just the last couple of weeks, you actually have Elon back focusing on Tesla. I hope you noticed that shift, and I do think that shift has been noticed by Wall Street as well. Now, also in the news today, Piper Sandler says that Tesla stock is likely to keep rising. Piper Sandler analyst Alexander Potter reaffirmed an overweight rating and $400 price target for Tesla, citing 2 key developments. 1, driverless Teslas spotted in Austin, and new car prices are rising, per Kelley Blue Book. Potter says these trends support Tesla's growth story and expects the stock to maintain upward momentum, barring any major robotaxi incidents. Sawyer Merritt writes on X, in which Elon Musk reposted, quote, "What sets Tesla's robotaxi strategy apart is that you can literally buy this car today for $37,490. No massive and expensive sensor suites that need to be retrofitted / added. It's an inexpensive and beautiful solution. And this is even before Cybercab, which will take it to the next level. Or I will mention the cheaper, lower priced Teslas that are expected later this year will also be FSD compatible." So again, this is why 10 years from now, Tesla is going to be really the only viable solution to FSD or autonomy in vehicles. Now, I believe 10 years from now, you're going to see really a regulatory environment that mandates FSD, where the car can take over for you if you don't see a car that's braking in front of you, right? The car can take over and do that, right? There's a lot of instances where even if you are a good driver, like having that added level of safety makes a lot of sense. It's kind of like seatbelts way back in the day. They weren't mandated at first, and then they were. And now all vehicles have to have seatbelts. That's what FSD is going to be like, but the only difference is FSD is a lot more difficult to produce than seatbelts. Like, not just any car company is going to be able to have FSD. Now, in the news today, China is giving a 6-month easing on rare earths, and that is giving Beijing continued leverage, according to the Wall Street Journal. U.S. negotiators agree to relax some export controls, including on jet engines. U.S. Treasury Secretary Bessent says today that trade talks with China will be a much longer process. U.S. Commerce Secretary Lutnick says there is no text on the deal, just an agreement after China's President Xi approves. So this is going to be a long process in dealing with China. I was optimistic or hopeful that we would actually get some kind of deal over these last couple of days etched out. It doesn't even look like we're there. It just looks like we have an understanding and certain frameworks that will be implemented, but there's going to be a lot more discussions here. U.S. Commerce Secretary Lutnick says China agreed because the U.S. won't go after bank records. Yeah, that's a little sus. Lutnick says China is giving magnets for Chinese students coming to the U.S. Treasury Secretary Bessent says an AI revolution may lead to a productivity breakthrough. Yes, robotaxis, self-driving cars, humanoid robots, okay? People becoming more efficient in their workplaces via, large language models, things like that. Of course, you're going to see a productivity breakthrough. Now, U.S. Commerce Secretary Lutnick says Europe will probably be at the very, very end in terms of actually getting a trade deal. And he says that Europe was more than thorny in trade talks. He says we're in good shape with a lot of countries, but good shape is not enough for the U.S. And we've heard this one before, but Lutnick says deal after deal will start coming next week. One of which looks close is India, another one that looks pretty close is South Korea. And Lutnick says we're now focusing on other deals. And Lutnick on China Talk says we used plane parts and ethane as a bargaining tool. I was optimistic and hopeful that we would actually see semiconductors thrown in there to loosen some of those export controls on NVIDIA, but it doesn't look like that happened. U.S. Commerce Secretary Lutnick says you can say that China tariff levels won't change from here. And he says they've agreed we are going to examine how China can do more business with the U.S. And he says that our leaders want this to be positive. Lutnick says the Chinese side always wants to remove export controls. Again, they want NVIDIA semiconductors. He does say that Trump and China's President Xi have to approve the final deal. And he says we are in a great place with China. So some definitely positive headlines today, but not the ones we really wanted to hear, which was some of those, again, semiconductor export controls being lifted. That was the big catalyst that would send markets to new all-time highs. U.S. Treasury Secretary Bessent says that capital investments within the U.S. will increase once the tax and spending bill is enacted. This is because the 100% essentially tax write-off for business-related, things, right? If you're a farmer and you want to buy a tractor or whatever, just using an analogy here, if you're currently only able to write off 50% of that tractor, but let's say the tax bill does get passed and you'll be able to write off 100% of that tractor, you may wait to see, especially to buy that tractor, especially if you don't absolutely need it. Like if you just want it but don't need it and you can only write off 50%, you might not buy it. But if you can write off 100% and you need it or want it and just don't need it, you may buy that tractor. Hopefully that makes some sense, but that goes broadly speaking, for capital investments within this country. That makes a lot of sense. And Bessent says that he sees a 6.5 to 6.7% budget gap for fiscal 2025. Bank of America's CEO Moynihan says corporations are being careful outside of AI investments. So when it comes to AI, they're investing. I mean, there is an AI arms race within this country and globally. But other things, they're being a lot more selective. That is one reason on this channel and in my personal finances, I have been searching for those under the radar AI stocks, those stocks that are going to continue to see money spent on their software and on their products and services, because I don't think that's going away anytime soon. Bank of America CEO says there is a lot more uncertainty in the small business market than there is in the core consumer, which is again a pretty good comment around the consumer. Bessent says that China should not be allowed to export its way back to prosperity. Bessent has really called for China to become more of a consuming country. China, just relative to like one Chinese citizen compared to one US citizen, we consume like 3 times more than they do. Just throwing a number out here. Like, we consume a lot more than they do. They export a lot more than they consume. So if they started consuming more, then there would be a bigger market for US goods. And that would also help China's economy to grow. And that's something Bessent has been advocating for throughout this whole trade war process. Bessent says if China upholds its end of the initial Geneva trade agreement, a big, beautiful rebalancing of US and Chinese economies is possible. He says that China needs to be a reliable partner in trade negotiations. And he says we will see if they are. Now, Donald Trump wrote today on Truth Social that the Fed should lower 1 full point. So that's 4 rate cuts. Just take it down 1%, which, again, you kind of have to agree with him following today's CPI report. As I talked about last night, I expected the CPI report to come in on the light side, and that's exactly what happened today. Core month over month was expected to actually rise from 0.2% to 0.3%. It actually fell to 0.1%. So it came in way lower than expected. And again, this was the first CPI report that was expected to show some of the increased tariff rates, right? So a lot of people were expecting inflation was actually going to rise. It did not. That's why you got that big boost in pre-market for stocks. Core year over year came in at 2.8%, unchanged from last month. The estimate was 2.9%, so that was better than expected. Headline inflation month over month came in at 0.1%. Expectation was 0.2%. And year over year CPI came in at 2.4%. Expectation was 2.5%. That was a little bit higher than last month's 2.3% number. So overall today, very positive development on CPI. Trump says today that Chinese President Xi and I are to work closely together to open China to US trade. According to a U.S. official, the U.S. will keep the 10% baseline tariff and 20% fentanyl tariff on China, with total effective tariff rates that will be 55%. This didn't change at all, but it kind of hit the headlines in a weird way today. It's nothing changed today, right? 55%, blah blah blah. Nothing changed. They didn't raise tariffs today. A CNBC reporter on X clarifies that this just adds to the 25% tariff that was already in place before this term. So if you add everything up, it's 55%. And US short-term interest rate futures jump after this CPI data, again, because people were not expecting a good inflation report today. And that's exactly what we got. So for June 18th, the next Fed meeting, there's a 96% chance the Fed is actually going to, am I reading this right? Cut rates. Am I reading this right? This doesn't sound right. Okay, well, it's right. There's a 96% chance the Fed's going to cut rates on June 18th. That is about 5 weeks from now. And then they're expected to hold through July until September, in which they're expected to cut rates again, with 53.8% odds. So a cut in June, a cut in September, and then it looks like a cut potentially on June 10th, although the odds are kind of all over the place. 39.3% chance of a cut December 10th, 28% chance of only 2 cuts by then, and a 21.7% chance of 4 cuts by then. So you're technically pricing in 3 cuts if you look at the probabilities here between now and year end, but it's probably more like 2.5 cuts because the distribution is so wide for December 10th because of all the potential outcomes that could come about in the economy and with inflation over the next 6 months or so. Now, we do have some earnings today in after hours as well. Oracle is going to be a big one, especially for those AI names, more that software, cloud, okay? It could definitely move the broader markets, that's for sure. Now, tomorrow, not too much for pre-market, but in after hours, you have Adobe and Restoration Hardware. Adobe, definitely important for that AI software component, although I don't think Adobe is going to move a lot of other names just because of the kind of software they're in. Now, tomorrow morning, we are going to get PPI month over month for May. You are expecting 0.2%. Last month was super negative. Same is true for core month over month. You're expecting 0.3%. Last month was negative 0.4%, so super negative. Initial jobless claims expected at 240,000. Last week was 247,000. That's actually a big data set we want to watch. Hopefully they come down. But if you continue to see a rise in initial jobless claims, Wall Street's going to start to worry about that eventually. So keep your eyes open for that tomorrow morning. And then on Friday, you get Michigan consumer sentiment preliminary numbers for June with 5-year and 1-year inflation expectations that are really going to be in focus. U.S. Treasury Secretary Bessent says if the debt limit is not sorted, it could be the biggest crisis since 2008 and 2009. And he says it is unthinkable that a debt ceiling breach could happen. In option activity today from hedge funds and institutions in Tesla stock, important to differentiate between the two. I think I butchered that again. Nonetheless, you get what I'm trying to say. You have 191 different trades totaling $154 million with a positive order value of 47%. These are big money investors, hedge funds and institutions. These are $100,000 to $100 million trades, okay? Typically not done by retail investors. So it's kind of neutral, positive order value of 47%. Today, though, if you look at the volume for this Friday's expiration, you have 60.36% calls and 39.64% puts. So retail continues to be more bullish on Tesla stock than hedge funds and institutions. Again, not super shocking these days. Same is true for next week. You have volume today of 65.68% to the call side, including everyone, including hedge funds, institutions, retail, everyone, and volume on the put side of 34.32%. So it looks like retail more bullish than hedge funds and institutions. Again, not super surprising, but I do think, especially tomorrow, you're more likely than not in for a pretty damn strong day tomorrow. And we'll talk about this more in the next video. It's really deserving of its own video, which will come out at 8 p.m. tonight. But I do think tomorrow is the beginning of the end for a lot of the bears in Tesla stock. Now, with that said, some shorts have covered on short positions heading into the robotaxi event. In fact, you've had about 9 million shares, about 8.5 million shares or so that have been covered just in the last couple of days. Short interest on Tesla went from 3.04% to 2.75%. That's actually the largest drop in short interest we've seen in at least the last 3 months. So yeah, somebody smart and got out of their short position in Tesla. Like, this is not the time to be short in Tesla by any means. You have $25.11 billion sold short in Tesla stock, totaling about 77 million shares sold short. This was over 85 million shares as of yesterday. So you definitely seen quite a few million shares there that were covered. And it looks like today you have about 309,000 shares that are actually being sold short. Now, again, if you look at Tesla stock, it's up about 1.1% today, gearing up for the robotaxi launch tomorrow. If you look at the headline S&P, this is also pretty interesting to me. We're just kind of going up in a very methodical pace. Like, we're not exploding higher. There's definitely a low volatility kind of place and time that we are at right now. You're just going like very systematically, it seems like. And it does feel like markets are primed for a larger move higher. Now, here's where it gets interesting, because if this rally was going to fail, it's going to fail right now. It's going to fail very soon. And that's why you have some bears that are coming out that are bearish, okay? But once we break new all-time highs, which is like, what, 1% away or so from where we are right now? Roughly like 1.2%, 1.25% or so. Once you break those new all-time highs, that's when people are really going to start chasing this market again. That's because, again, as I've said before, once you hit a new all-time high, you tend to hit more new all-time highs with a much greater succession rate, okay? Typically, if you're going to fail, you're going to fail right before you hit a new all-time high. And so far, we have not failed. You're continuing to go up at a slow and steady pace. So watch for that big breakout, which could come by the end of this week. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.